Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Let me display the PowerPoint presentation. It is my trading system, the final webinar. This is the 10th webinar in this particular webinar series, which is being presented here in commemoration of the 10th anniversary celebration of FX Trade. So today's final topic is professional approach to trading. So I have given or explained during the previous webinars how exactly we can overcome the constraints which we can face from that of the players, from that of the brokers, and also with regard to various other media and channels which are giving various information to us. How exactly we have to digest everything and visualize the exact market. What we visualize is more important for our trading decisions. So I will rush up with it of the concepts as a professional, how exactly we have to give the right perception of the market. So you know about the various types of moves in the market, and also you find that suddenly US dollar is gaining, and also later on you find Euro and GBP are gaining. Yesterday you would have seen that after the FOMC rate, there was a quick spike in Euro and GBP, and subsequently we thought, okay, that is a trend, so Euro and GBP could continue rising it. And today you come across all the way they had dropped and they had come below that of yesterday's low. So this is how you come across the market makes subdued moves, and suddenly either the upward spikes or the downward spikes. So these spikes are quick moves. And for these quick moves, they can give any sort of rumor, or they can use unscheduled information. Thereby, they can bring in such massive moves in the market and trap either way the traders. So we should be prepared for such eventualities in the market, so that we will be able to really take that as an advantage for our trading, rather than becoming afraid and waiting for the waves to settle in the market and later on entering into that other market. So we should be able to capture the volatility in the market as a right opportunity for trading. As an opportunity trader, we should be able to find which way we can take positions, thereby quickly we will be able to grab profit. And our objective is to earn money from that other market, and we are not really worried whether Euro is going to drop or Euro is going to rise. We only look for whether we can do a buy and sell trade or a sell and buy trade. Yesterday I explained with regard to the easy way of trading, that is trade at ease or trading with a leisurely mindset. And today I am going to give you what sort of professional approach you can take while doing trading in the market, and this could give you the insight for those who are doing full-time trade. And there are many traders who probably leave their job or based on various reasons, etc., and they wanted to become a full-time trader. When you take a decision that you want to become a full-time trader, obviously you should be able to have a recurrent income to sustain. And obviously when you want to have a recurrent income, you become employed with somebody, and somebody expects you to do your duty properly, thereby they pay your salary. So obviously you have to be dutiful when you want to get the salary from your employee, otherwise you could give the pink slip. So you have to necessarily do your duty, controlling your emotions. Right? So that is the professional approach. So control your emotions as if you are doing the trade for somebody, and do it in a dutiful way, and also read the market as much as possible, and try to take all the measures pertaining to that of the risk limitation, and try to trade looking into that of the opportunities in the market. So let us go one by one how exactly we can do that. The rumors are more effective than the data release. And yesterday you know that the data release was there as FOMC rate decision. And subsequently you have seen much bigger drop today, and many people were talking that there are no solid reasons for a sudden reversal in the market. So this is how, when The players rise the market when the traders think this is the end of it, so let us take long position in Euro and GBP and wait, and obviously they are going to rise it. If you develop a mindset of that nature, then the players reverse the market and show you the other way, that how exactly you are going to hold your long positions. So when the herd of traders continue to turn long and turn short in the market alternatively, the players are bound to make this sort of moves. So always envisage this sort of moves in the market and decide on your trading. So avoid many of the traders avoid taking positions before the data. After the data release, they think that they can straight away enter into the market depending upon the reaction of the market to that of the data. What happened yesterday? They gained the level, and subsequently somebody has taken a buy position and it was making profit. But if you fail to realize the profit, then obviously you will come across the loss the next day. So obviously one need to understand that exit also has an importance in trading. So when you take a decision with regard to the trading, then obviously plan well with regard to your entry, exit, and also the stop. And whatever the stop or the exit strategy you develop, but the rumors or the real breakout information for the market and may not be published widely, but it can have an havoc in the market. So we need to be prepared for it. So expect the unexpected, the rumors or a sudden unscheduled data release, etc. Then quick moves may change the mindset from bullish to bearish or the other way normally, but avoid going by personal and market sentiment. So yesterday when Euro and GBP went up, and many have asked the question in the blog, Euro and GBP have gone up, is there any chance they can come down? And I gave one reply calmly that my algorithm says that the market is expected to drop. Why I said that? Because if I say that I feel the market is going to drop, then they simply think that I am holding a sell position. Because of that, I perceive the market wrongly, that it could drop. But at the same time, when you see a quick rise in the market, one can understand why they are rising the market so quickly in the late hours. And after rising for three levels as an extended move, they were not holding the high. So they have been quickly selling at the higher level. So obviously the players trapped the short sellers during the drop and subsequently booked a profit after the rise. And again this morning from that of the Japanese session, they started dropping the market. So we should not go by that of the sentiment created by the market or whatever the sentiment we perceive it from that market apparently. So always whenever there is a quick move, think opposite is the intention of the player. When they quickly rise it, okay, they are booking profit. When they are quickly dropping the market, understand that they are buying. They drop and buy, and they rise and book profit. So this sort of understanding is very essential. Get the overall picture of the market. Okay, the players are now dropping. This is the first level dropping, second level dropping, third level dropping. As I explained the intentional moves, afterwards they don't do the hat trick, continue that, and they reverse it. So these things, if you follow clearly, you will be able to understand every session you come across the trading advantage or the trading opportunities you come across in the market. Then you also check in the websites or anywhere whether any unscheduled release is there from time to time. Besides looking into the data release, if you want to be a professional trader, if you want to be a full-time trader, trade all through the session. Then false moves or the purposeful moves of the players. So the data release may not have any difference from that of the previous data. Still, if they make a quick rise, giving a different type of interpretation, understand that the players have trapped the short sellers. So after finishing the short covering of the traders, they are going to drop it. So this you should be able to visualize. And that is very important. And every quick rise and a quick drop are purposeful. It is not that they are unwinding the positions and again they are entering into the market and things like that. they continue to play and operate the market. That is why they are referred as operators. Then whenever you are trading, you might be placing some orders and you might see that probably the order has not been filled. Whenever you keep a limit order and things like that, periodically remove the pending limit order because that order might be pertaining to that particular day. And there are some people who have got a tendency of leaving orders straight. And the next day, if they come, then automatically some of the orders would have been filled and the usable margin would have been eroded. So you should not leave the orders as a pending orders because in the stock market, after the market is over, there is a system to remove all the pending orders. Whereas here, you don't have a system because it is a 24 hours market. So you need to carefully see that the pending orders are removed periodically. And trade either with a hedging order or a limit and not both. So when I explain to you, take a buy position and keep the hedging order. When the hedging order is working, don't keep the limit order. Because quickly when they make one downward move and upward move, and the hedging would have been filled by the time you realize your profit would have been booked on the buy position. But the hedging order will be making an unlimited loss. So either you should be able to use the hedging order to limit the risk, and once the position makes profit, you can keep stop at entry, then you can keep the limit. Until such time, you should not keep the limit. And there are many people who are not able to understand the consequence. In the event if the market make a whipsaw move, you should be badly hurt when you hold all the limit as well as the hedging order. Then avoid giving strains to the eye by watching continuously the quote or the charts. So you have to relax the eyes because the eyes are being deployed effectively in order to understand the market. So obviously when the eyes become fatigued, then it might misread the market. So it might give a wrong signal to your mind and the mind can become emotional. So calmly trade. For that you have to distract your eyes. So it is not that your mind you have to control it, but the eye is the one which is sending the information to that of the brain. So you have to take care of that. Then don't constantly look into that of the fourth page of the chart, and you can watch it frequently. Watch for about 5 minutes and relate it to that of the high and the low. Okay, take a break for about 10 minutes and come back and see. Whenever they are holding it in the middle level, understand, okay, they are just want of volume holding in the middle level and making small swings, then you can attend to other work. And during the session start and the session close time, they could either come to that of the low and the high, then you can watch those sessions. Because it is a 24 hours market, so obviously you need to see that as a full-time trader, wanted to see all the 3 sessions, but give enough rest to the eyes so that you will be able to watch all the 3 sessions whenever required. So schedule your timings accordingly and take nap or something like that in between so that your eyes are not strained too much. Then think about your trade plan, but they should not dominate other thinking. Because you might be having a plan before coming to that of the trading platform, but that plan may or may not work. So you would have taken a decision, okay, when euro comes to 1.3050, I want to buy. Then probably you would have seen earlier euro was trading around 1.3115. Then you wanted to buy after the drop. Then you go back and go and attend to some work and come back and you see that euro is trading around 1.3012. Then immediately don't think that it is available very cheap and don't try to enter into it. Don't relate it to that of the pre-planned idea with that of the current market situation. And that can give you a wrong signal. Probably euro might be making further drop and without understanding it, you might be entering long position and get hurt. So we have to always look into that market for 30 minutes. When you are opening the trading platform on the live market code page of the chart and understand where exactly the market is, whether it is near the low or near the high. In your observation of 30 minutes, they have not breached the high or the low, then you can think of taking the positions. This is always essential. Then think about your trade plan and you have to take decisions on the spot. and avoid being preoccupied. Don't be thinking about the previous trades, etc., and try to recover the money from that what you have lost in the previous trade, and try to, with the same idea, if you enter into the market, then your emotions might be triggered. You know very well the sentiments are created by quick moves in the market. So you need to have a balanced approach when you want to do a full-time trade. Then many attributes may be used to create the market sentiment from time to time. Don't give importance to the other attributes. And there can be an attribute from any country or any analyst. And those attributes are short-lived. And they know very well the traders do not have a strong memory, and they continue to release such attributes, and they simply give an opposite attribute. Nobody has got the mindset to ask them later on. Yesterday you said that euro will go up, and today you are telling euro is coming down. Then you simply say that's what the chart says. Okay. So people don't have the mindset to ask such people unless and otherwise they are available in the blog. So find invariably that from time to time so many attributes might be created in the market in order to create the sentiment, and they can finally fall into either a bullish category or a bearish category. So whenever they create a bullish category or an attribute which is related to the bullishness or related to the bearishness, understand that they are only helping the players to do their job effectively. Knowingly or unknowingly, they just help the players to create the market sentiment very effectively. And keep always in mind, the market sentiments are not perennial. So you know very well, the interest rates from that of the last year, they are not being raised. But you come across every time the sentiments are created in a different way in the market. So when the interest rate has not been changed and there is no fundamental change as such, but the interpretations vary, you find because of that euro was dropping earlier, now euro is rising later on. So you find the same data can be used for a different type and can be interpreted in a different form, and ultimately the sentiments are being created, and the sentiments are short-lived and they are not perennial. So you have to keep that in mind and don't go by the sentiments created in the market, and don't think that the players are going to use the sentiment forever. The players take that advantage out of the sentiment. So always relate the sentiment created to that of the players. Okay, the players have created the bullish sentiment. So what they wanted to do? Exit out of their position. Okay, the players have now created a bearish sentiment. So they wanted to buy. So always related to that of the players, then you will be able to understand that we can also trade along with them, rather than you become victim for such market sentiment. So avoid being influenced by such market sentiments, and they are short-lived, you know very well. The players also taking positions in the market by creating the sentiments, and they also need to exit from time to time. So they also need to book profit. So obviously when they have created the market sentiment and they cannot continue to buy euro indefinitely, and they have to book profit at one stage. After booking profit, they have to re-enter into the market, and so that only when they have further positions, they will be able to book profit. So obviously, they have to create the bullish and the bearish sentiment alternatively. So they have to create the bearish sentiment and buy it from that of the traders who sell it at the lowest level, then later on rise the market and create the bullish sentiment and sell it to that of the traders who are bullish and willing to buy it at a higher level. So they alternatively do this. So don't think that the sentiments are going to be bearish or bullish forever. So once you decide on that, you can understand there are no separate bulls and the bears in the market. The players act as bulls and the bears alternatively, because if the bears are there to sell, then what happened? Those positions, they simply leave the positions in the market and go because they are bears. How can it be? They have to close their positions. Then similarly, yesterday they raised the market, and after rising the market, they have simply bought all the positions and they are just looking at the losses now. No, not at all. They rise and booked the profit handsomely from that of the traders, and only the traders become bullish and bought it from them. So this we need to understand that there are no bulls and the bears alternatively acting in the market. The players act as bulls and the bears alternatively. So you find that the bulls are stronger, the bears are stronger at the current situation and things like that. These are all the wrong interpretation because nobody has seen whether any bear is trading in the market or a bull is trading in the market because only human beings are trading. Then keep in mind the players are well informed and they take definite risk. See now, for example, in the case of USDN, they've gone below that of 85 area and they have gone to that level of 84.74 if you see it in the live market portal, and they are strongly holding below that of 95. And you know that it has been remarked that it is 15 years low. Okay, such lows are created once in 15 years and not on a daily basis. So we need to understand. So keep in mind the players are well informed, so they are able to push down the market when the traders are holding long positions, and they create the real fear for them and the margin call, and we cannot afford to take such risk because from 88 they have been dropping it all along and they have come to that level of below 85 and simply holding the market for nearly about 2-3 hours now without cutting the low, and it might give a impression for many of the traders they could go even to that of 82, 81, 80, 79, why not 88, 76. Imaginations can go to any level, but why the players have stopped cutting the low? They are simply holding it there and they want the traders to liquidate the long position towards close of the European session. Later on during the US session, you will see that the players have bought all the sells and subsequently making the rise. So the traders liquidated the positions out of fear, but the players hold such levels without any fear. So because they know very well there won't be any intervention from that of DOJ. After the downward stop and extended stop and when they started giving the signals, then there will be an intervention story. So it will be an after impact. You could see USDN could rise, but they will not avert such falls. So you have to understand how the players have got a good control over the market. So you can take positions any level and keep a stop of 30 pips till your loss is determined. So this sort of understanding is needed. And if you go by the sentiment, then you might avoid taking any buy position or a sell position. So this is a very, very important information one need to understand, that you should not be influenced by that of the market sentiment. If you want to be a real professional trader, and be balanced and be confident, but avoid being overconfident. How you become overconfident? You think that, okay, my usable margin can really withstand my position, so I need not keep any stop. That is overconfidence. If they make a move of yesterday and today, you can see on either side, it can create the margin call if positions are too many. So you should not have overconfidence. Understand that the players can make definite risky moves in the market. So you need to have the hedging order, or you need to have the stop to limit the risk. So you can have the confidence. If you don't have confidence, you cannot enter into the market. You will be afraid of the market and you will only think, okay, let the volatility get settled. Let me enter into the market, earn 10 pips. That could be the approach. But if you want to really capture the profit out of the volatility in the market, you need to take little certain amount of risk. Take only one position and try to keep a stop or a hedging order to limit the risk. And in the event the going is good, then try to keep stop at entry. Then take another position also, because one position you have avoided the risk. Another position you can take in a related currency in a same direction or in the opposite direction, whichever you find it is the expected market move, and try to keep stop at entry. This way, if you just build up your positions, then there is no fear. So simply taking about 5 positions in one level, 5 lots in one level, and say that, okay, let the market rise about 50 pips, I'll book partial profit. Then let it rise another 100 pips. I'll book partial profit. Your plan is fine. Are you going to see the market continuously rising and giving that opportunity for you to trade? You may say that risk reward ratio is 1 is to 4 and things like that, but if they show the risk first and later on the reward, then you are not there in the market. So always keep that stop at entry. That is very important so that you are eliminating the risk after taking the position. Then you can plan anything of that nature, either a partial profit or a full profit or whatever it is. Then watch the market when it is required. As I said that during the early session and the late session and little bit of mid session, if you want to focus on the crosses, and otherwise you find that market data are being released only during the early session and the late session, and during mid session the market will be invariably subdued and it may not give much of a trading opportunity. So relax your mind and eyes accordingly. Then tell your families and the friends. This is the most important thing about your trading success and failures, so that it doesn't cause you any guilt. You don't feel guilty that I lost so much of money in the market. And if you don't tell anybody, then you don't come out of that particular guilty feeling, and you somehow feel that I should avoid telling my wife that I lost so much of money, and subsequently I should earn back. Later on I can say. But when that guilt is working in your mind, then you may not be able to successfully trade and earn the lost money. As I explained yesterday, that you might lose in one trade, but it may not be easy to earn that money in one trade. So obviously you have to share your feelings and you have to tell your friends and family so that you don't become an unusual trader or you don't become addicted to trading. Because such people, your family and friends, could give you a logical idea, or they can make a simple observation of the market and give you certain ideas so that which can really help you not to do over trading. Because you can take a decision that I should avoid over trading, but when you find that going is good or going is bad, without your decisions, quickly on an impulsive way, you could enter into the market again and again in the like averaging, etc. or similarly closing the hedging positions, etc. The quick moves in the market can really trigger your emotions. So always share it openly with your friends and family members, either the success or the failures, so that you will be able to really understand that you are not in a wrong path. Then remove the guilty feeling from your mind. Then avoid justifying a trading decision. And there is no point in telling anybody that yesterday I took a trading decision. Euro will definitely go up. I had taken a buy at 1.3150 and I saw that going is good. Unfortunately, the internet went off and then later on Euro dropped and I could not catch the profit. There could be so many ifs and buts. But there is no point in justifying it. Your trading decision was wrong. Ultimately, it is not proved right. And you just forget about the trade. Okay, understand there can be so many ifs and buts in between the trade. And between entry and the exit, to be prepared and go in for a contingency plan so that next time you don't come across such problems. Rather than trying to justify people or telling other people that I just earned about 30 pips, I just earned about 40 pips in this trade. By telling it, you become impulsive. And don't talk about your trade at the time of trading. Probably you share your experience with your friends and relatives or anybody whom you find suitable. And say that this is what the market has moved and I was able to take a decision. Subsequently, the trade went wrong. Doesn't matter. Next trade, I'll be more cautious. Then it is something a similar situation like analyzing a cause of a vehicle accident. Two people come on the same side and dashed against each other and each one accusing the other one. And ultimately that accident has happened. And trying to find out who is guilty and who is not guilty and who is negligent and who is not negligent doesn't get the vehicle in a proper shape. So you have to only think of the future action after the accident. So You have to always think that accidents do happen in trades, and there is no point in talking about the accidents. You have to think of remedial measures so that you avoid in future such accidents do not occur. Then learn the art of trading fully and then enter into the market. So my entire effort of giving all the 10 webinar series is mainly to give the insight for the traders. So if you want to enter into the market, try to read as much as possible in the websites, and in FX Street also you come across an education too. There are so many informations available. Learn about the fundamentals and the technicals, and also learn about the players, etc. And then coolly take decisions. Don't go by any specific rule that this is how I have to trade, because the market might be showing changing environmental conditions. Obviously, our rules are to be flexible. Then accordingly, we have to take that trades. So that is why I always emphasize with regard to the types of market moves they are doing from time to time. So which will be able to take care of the volume variations in the market. Then accordingly, if you try to track the moves and trade, then you will be able to do sensible trades in the market. Then always use small equity to start with. Don't open an account, trading account, just because you are richer or you can afford to lose money. Then don't try to open with $50,000 or $100K, etc. And subsequently, when all the money is lost, you feel very depressed, and without your understanding, the money would have just eroded. And that is not a big deal at all, and that doesn't show any greatness of yours. That means you are unprepared for trading. So always expose a small equity and take less risk, and check how far your mind is able to withstand, and check your confidence level, whether the confidence level is reduced or increased, or whether it is overconfident, or simply it is having a tendency to speculate. And check your mind. You might do well in demo trading, but in real trading you have to really check this. Use a small equity and try to take a risk by taking minimal position so that you will be able to control over your emotions. When the going is good, then gradually you can improve upon increasing the equity size. Then you have to always keep in mind another important aspect. The players take a longer time to rise the market, but they take very less time to drop the market, because if they simply withdraw the support, the market can collapse. So you would have noticed at once he was telling that nearly about from the month of May, the market was gaining the levels, GBP was gaining the levels, and you know that how much of time they had taken to gain about 1600 pips. To drop about 200 pips, 300 pips, it just takes one day for them. If they do it for another 2 days, you will find about 600 to 700 pips are eroded. So obviously, you need to understand that market rise takes a longer time and the drop takes a lesser time. So this, if you are able to understand with regard to the market cycle, so you will not be thinking that there will be a prolonged drop in the market, and you will come across the pullbacks coming very frequently. Then, when you are trading in the market as a full-time trader, there should not be any compromise on your lifestyle. So no rush to trading, no impulsive feel at any time during trading and after trading. So you should not show your anger or frustration towards your family or your friends when you have lost the money. You have to be very cool like a professional. A professional who works in a deal room, he would have lost or gained the money during the day, and subsequently when he goes home, he does not show that anger and things like that. In fact, he shares the information with the family members at times because he works for others. Whereas when you work for yourself, then you avoid telling your failures. So think always that you are working for somebody and try to share it so that your mind will get relaxed. Then develop a reporting concept and save the trading report from time to time. This is very essential. Whenever you know nowadays the trading platform providers, they do a lot of tricks. And if you try to save your reports very frequently from time to time, periodically, And whenever they just rework and show some other trade which you are not really entered into the market and things like that, you can prove it by your reporting. Then periodically review your report to show how the going is good or not good. Reflect why it has gone wrong or how far it is going good. Is there any scope of improving it? These sort of reviews are very, very essential. There is no need that you need to prepare a chart or a histogram and see what is the performance and things like that. But you yourself can assess by taking into consideration how much of money was earned in this particular month or the next month and next month. Why it has dropped? Is there any way I can improve it? Is it because my mindset was not all right? So you should be able to adjust, or whether I had taken more positions because of that I incurred more loss. This, if you could analyze by yourself, you yourself will be able to adjust your mindset without even somebody counseling you. Then withdraw the profit from time to time whenever the profit is accumulated in the platform. When the profit is accumulated in the platform, it could give you a trigger for you to take more positions. Suppose you are double the equity, then obviously you will immediately think that why not I double my positions? And after doubling your positions, you would have seen that whenever the market goes against you, the drawdown also becomes bigger. So always withdraw the money, realize it whenever it is required back. You can always pump in the money and keep it as a contingency money for trading. And whatever you require for your lifestyle, you can withdraw it, but keep always some money as a contingency money and try to develop the means so that you can deposit quickly to avoid margin calls, etc. And always take less positions so that you will have more comfort. Then never blame the market. There's no point in yelling at the computer or yelling at your trading platform or yelling at your broker. And the brokers, the owners of the broking companies are not going to talk to you. Only their employees will be talking to you. In case if there is an error and things like that, if you shout at him as if you are talking to the broker, then that fellow might simply cut your telephone. That's all. Because he is only an employee. And whatever the employer is telling, you just go in for a local stop and that fellow will be doing it for you. And there is no point in blaming that particular deal room person or a bank deal room person. Ultimately, the owner is giving the instructions. So, you know that you are talking to a broker and the broker may not be able to handle you properly. And the players might be doing whipsaw moves in the market. There is no point in blaming. And similarly, the bankers, they would not have transferred your money properly in time and things like that. There are so many constraints when you come across, but there is no point in blaming. You can always communicate and inform them. These are all the things happen, but that should not affect your emotions while trading. Always keep that as a secondary work, and that has to be mechanically done. And you can send an email and complain. You can give to the broker and ask them to address to that particular complaint, but that should not affect your trading. So your trading should have this emotional free trading decision ability. Then you are responsible for your own trade. So nobody will be able to trade for you, and you have to take care of your money. And you might be talking about money management and things like that. And obviously, when you incur a loss, then you will accept it. But if somebody incur a loss on your behalf, you may not accept it. So always keep it in mind that it is not easy to control our mind when somebody loses your money. So see that you are a good manager of your money. Then earn from the trades to improve the lifestyle. Always keep that as an objective and focus on it, and not to have compromise. So you should not have a compromise with your lifestyle, and you should not keep away for a longer time, and always try to give the relaxation so that of the mind as well as the eyes and also to your body. Don't enter into the trading room when you are sick and things like that. Always give enough or take care of your body and take care of your mind when you are a professional. So professionals do their duty. They come to office in time and they try to do their job, and after leaving the job, they don't even think about the job. So that sort of approach you need to have it that you are doing the trading for somebody. Then if you develop the mindset, then you will be able to really improve and control your emotions. Only when you see that it's my equity, so I have to safeguard my equity. Then when the equity erodes immediately, it triggers your emotion. Then you may read several market comments and the reviews, and they may give similar or opposite ideas from time to time. But visualize how players view such reviews. So there might be an adverse review about Greece problem, and see how the players have taken an advantage of inducing the traders to sell at the lowest level euro and GBP. So always read such reviews like a player who is reading such reviews. Then you will be able to understand rather than you review it as a trader. And if the players read it, they will try to develop the ideas. Okay, this news is good for us to drop euro. Okay, they are going to drop euro using it and they are going to buy it. Accordingly, you do the trades along with them. Always keep in mind the players discourage sell at the and buy trade near the high. Yesterday you would have done a sell and buy trade. They will discourage and hit the stop and for the season. And whenever they are making a higher level consolidation, or whenever they are doing a lower level consolidation, they will discourage you to doing a buy and sell trade. You try to buy now USDN, they will discourage you, not showing profit, and that is how they will show you or discourage you whenever you are really trying to do a bottom fishing or a top level exit or a fresh short selling. So keep that. They are not going to give you or encourage you to do that, and they will only encourage at the higher levels to buy, at the lower levels to sell. And don't go by that sentiment. Then always understand the multi-weeks, month and the year high and low are shown rather than traded for a long time. Like today you find 15 years low in the case of USD Probably it is short-lived, just for a day. And it's not going to be for 15 years like this. That is why it is called 15 years low. That means once in 15 years it has shown. So nobody is going to hold the positions for 15 years. So use such levels for position trading rather than like bottom fishing or top level exit, and don't be afraid of such remarks. Then understand the market cycles are spiral. So they have to keep coming and going up. So it is a spiral formation. Unfortunately, I don't have any slide for that to show it. So if the market starts at the bottom, it will just make a spiral move and slowly gain the level and come back. So every time you come across like a spring, when you just twist the spring and connect both the ends, you come across a circle. That is market cycle. But in the cycle, you come across the swings happening in the market. That is why you expand it in a linear fashion and call it as a channel. But when you try to draw it as a channel, we misidentify the trend reversals within that particular spectrum. So if you try to imagine that it is a spring which is connected together on either side, so that market is of a cyclic nature, you will be able to understand. So if there are questions, I'll try to read the questions. So that meanwhile, fix the camera over the top of the line code page. So this is the last webinar in this particular webinar series. They are being recorded. So we can go through all leisurely during your holidays or during free time, and then if there are any questions, you can ask anytime, and I am willing to answer those questions. In your experience, how long we have the practice in a demo account before taking it? You can do any number of years demo trading, but doesn't give the guarantee that the real account you are going to be very successful. So just to understand the technology or how to place the orders, etc., for about a week in a demo trading platform and open an account with a lesser equity and try to understand how to control the emotion by taking only one mini lot at a time and use all the strategies. And even though it may look very small, that one mini lot only $25 or $50, and I'll be able to earn only $10, $20, don't ridicule it. And if you learn it well, probably while driving, You might be driving for a shorter distance, but still that might be very difficult. But you have to understand, you have to move the vehicle properly without any constraint. Once you develop it, then any number of miles you can travel. So that is how you have to do it. Market questions. Okay. These are all the questions. So let me show the last slide. The market related questions, I'll answer it in the blog, please. No time. So I take this opportunity to thank FX Street permitting me to present the entire webinar series as my trading system 1 to 10 webinars. I am really grateful to Maud, Vicky, Santa, everyone who is near me, who are all here to encourage the webinar presenters to explain to the traders, and we do it with a purpose of really helping the traders to develop an insight of the market. And you participants for your patient listening and understanding that idea. And I'm not telling you that absorb all the concepts what I have given, and whichever is useful, you try to make use of it and try to develop your own concepts of market and read the market well appropriately. And also, I'll continue to give that explanations and the expected market moves in my blog and answer to the questions from time to time. And also I'll be presenting the Asian session live market analysis webinar Monday through Thursday, and also once a month, the monthly twin webinars tracking the forex market together. So if you read all the My Trading System or listen to the webinars, you'll be able to develop an you will be able to develop a good idea how exactly I am presenting all my concepts and also market reading, and it will be easy for you to track me whatever I explain, so that you won't ask what is rise, what is fall, what is drop, and things like that, and you will be able to really focus on the market and make use of the market swings to earn money from the market. So thank you one and all. See you again during the next webinar time. So I take this opportunity and privilege to thank everybody here again and again. So wish you all good trading system development and successful employment of the trading and earning from the market. Thank you one and all. Bye.